Ladies and gentlemen, I'm Andrew Jeffries, the Chief Executive of Echelon. Today, I'm excited to share our progress and our prospects as we put the pieces together for a brighter energy future. We produce hydrocarbons, we make money, we pay dividends. Our board and management are remarkably experienced for a company of our size, and this has driven significant growth. That's evidenced by these revenue charts, which clearly depict a phenomenal increase over the past 4 years. Since 2020, we have pursued a strategy of sensible growth in good markets, fitting our balance sheet. That is really paying off. In the first half of financial year 2025, we achieved some excellent results. Operating cash flows up by 30%. We declared an interim dividend of 1.5 cents per share. I'll let you read the rest. We added 25% more to our Mereenie gas field interest and undertook a 2-well drilling campaign, and that has delivered the best results in decades. Those results were driven by keeping fluid off the producing formation throughout the drilling and the completion process. That is not new tech, but it's a new technique for Mereenie. Really paid off. Our assets include interests in Australia, in the Amadeus and Perth basins, Indonesia, and New Zealand. Notably, we own about half of ASX listed Q Energy Resources. They have experienced some really good returns through the Mahato oil field in Sumatra as it's been drilled out. Our activities for the next year or so are pretty packed. We've got a well at Beacos in the Perth Basin and later some wells in Palm Valley where we have spare plant capacity and pipeline capacity. Those excellent Mereenie well results are making us think very hard about more wells targeting the producing horizon, but also the shallower stairway horizon. We are talking about acquiring 3D seismic at Mereenie to optimise all that future activity. It would come at a great price point because it would fit in with activities on the neighbouring EP145 block. Now that is a great segue into EP145. EP145 hosts a proven gas discovery in a structure that could be as large as Mereenie. Now, Mereenie originally held about over 500 petajoules of producible gas. Let's put that in perspective. If you said that gas was worth $5 a gigajoule, once you'd paid to find it, drill it and produce it, simple multiplication says that value is $2.5 billion. I am not saying that's right for EP145, very early days, but it could be big, and we know it has gas in it. Look at that picture, that is the West Walker 1 drill stem test flare from 1982. And don't forget, we now have that special sauce to drill great wells in these rocks as we did at Mereenie. This structure needs 3D seismic to determine the size of the prize and also the best place to test it. Our team's working really hard on finalising the right seismic at the right price to answer the questions we need answered. Exciting times in EP145. So we're putting the pieces together. We're expanding our footprint and adding value to our assets in ways that we can afford. We're boosting production organically through science and technology. We're growing in markets that have favourable prices and really good counterparties. And where our balance sheet allows it, we are paying dividends to our shareholders. We do not sit on your cash. Gas is the only cost-effective way to provide reliable and cleaner energy to back up burgeoning wind and solar capacity. I think we can all agree, showers, best taken warm, burgers, best eaten cooked. Gas really is a 3-letter word for the energy transition. Thank you.